Hello, everybody. A very good morning to you. I hope you're doing well. I hope you're really studying well for your exams. So, as decided, we are discussing mock paper one today. Okay, so let's begin. Yes, before that, this paper has been set in the format of your question paper itself. So, let's start discussing our mock paper 1 from question number 1. Okay, yeah, question number 1, part A will always be true and false. So let's start. When shares are forfeited, the capital account is debited with called up capital of share forfeited, and share forfeiture account is credited with calls in arrears of share forfeiture. Now, they are asking whether this is true or false. This is false, ma'am. Why? Because when you forfeit the shares, so the journal entry will be equity share capital account debit to calls in arrears to forfeiture share account. Now, this will be number of shares into called up value per share. This will be number of shares forfeited, not number of shares forfeited into calls not paid, and this will be number of shares forfeited into amount paid. Okay, so the amount paid is what you credit your share forfeiture account. So what they have said, with calls in arrears, so that is wrong, so therefore this is false. Then the next one, discount at the time of retirement of bill is a gain for the drawee. Yes, this is true. Now, retirement of bill means paying early. So when he pays early, you have drawer and you have drawee. Retirement of the bill means the drawee is paying the bill early. So if he pays early, therefore the drawer gives some discount. So this discount is an expense for him and a income for him. So therefore this is true, income or gain, whatever. Okay, sure. Next one, receipts and payments account highlights incomes and expenditure. Receipts and payments account highlights incomes and expenses. Obviously, this is false. Receipts and payments account is your cash book. It's, or can I say it is summary of cash book. Okay, so therefore this is false. Then the next one, capital. Uh, so we have told capital plus long-term liability equals fixed asset plus current assets plus cash minus current liability. Yeah, if you see your balance sheet, capital, long-term liability, fixed asset, current asset, cash, and current liability. So this plus this and this minus should be the correct answer, but this is inclusive in current assets. Therefore, this becomes false. Next one. Partners can share their profit and loss in capital ratio when there is no agreement. So also this is false because when agreement is silent, the profit sharing ratio is always equal, not capital ratio. And the last one, accrual concept implies accounting on cash basis. Again, this is false. Accrual means incomes and expenses are recorded as in when they are accrued, not when the actual cash is paid or received. Okay, so in that case, this becomes false. Next one, 1B, question 1B. Prepare journal entries. Prepare journal entries for the following transactions in the books of Symphony Brothers for the year ended 31st March 2020. So you have four journal entries. So you start with in the books. Okay, I'll anyways be giving you the, uh, how to present your answer. So here we will just discuss. Employee had taken stock worth 10,000, cost price 7,500 on the eve of Deepavali, and the same was deducted from their salaries in the subsequent month. So can I say salaries is an expense, so you debit salaries account and you credit to purchases. When goods are going out free of cost, we always credit purchase account, and it should always be, the amount will always be the cash cost price, not the selling price. Okay. Next one, goods distributed by the way of free samples 2000. So again, this is goods going out free. So you debit advertisement account to purchases account 2000. Okay. Next, income tax liability of proprietor 1400 was paid out of petty cash. Now, income tax of the proprietor is his personal expense, hence considered as drawings. So drawings account will be debited and it will be credited to petty cash because it is going out of petty cash. So that is 1400. And lastly, purchase of goods from Naveen at the list price of 2000. He allowed 10% trade discount, 50 cash discount. He was also allowed for quick payment. Now, so when you make purchases for 2000, he gave trade discount of 20%. So 20%, and I think it's 1800, and you also received cash discount of rupees 50. So you only paid rupees 1750. Now as we know, trade discount will never appear in the box. Therefore, when you record your purchases, it will be recorded at 1800 to discount received, which will be your income, and to cash paid, which will be 1750. Okay. Next, discuss the limitations which must be kept in mind while evaluating financial statements. So they are talking their next one, question 1c, they are asking us limitations of financial statements. Now, limitations of financial statement: one, non-monetary items cannot be recorded. So that is one limitation. Second, when there is inflation, that is not recorded in the books. The accounting policies have conflict with each other, so that you can't help, like how we've discussed concepts and conventions and how they have conflict with each other, that again it is not there. And accounting estimates are based on personal judgment, so everybody's judgment is different, therefore that is one limitation of the accounts. ठीक है, चलो. So yeah, theory again you will have to read more in detail and write more proper sentence wise. So yeah, ठीक है. चलो next one, question number 2. Physical verification of stock in a business was done on 14th June 2020. The value of the stock was rupees 96 lakhs. So, okay, the following transaction took place between 14th June and 30th June. So, you have on 14th June 20, you have done your physical verification. So, and your year ends on 30 June 2020. So, from this date to this date, whatever transactions have taken place, you need to adjust and find the value of stock as on this date. So, there we will four adjustments, and then we have to find the value on 30th June. Okay, so how to do statement of valuation of stock as on 30 June 2020. Okay, now the value of stock given, so I'll write here 2a, value of stock as on 14th June 2020, they have all given us as 96 lakhs. Okay, then out of these, out of the goods sent on consignment, goods at cost worth 4,80,000 were unsold. So we will add them back. So add unsold stock on consignment. So that is about 4,80,000. Okay. Then purchases of 8 lakhs were made, out of which 3,20,000 were delivered on 5th July. So 3,20,000 were delivered later. Purchases are made, and the balance, can I say 4,80,000 have been is with us for the period 14th June to 30th June. So you add purchases. If I make purchases, my stock will increase during the period 14th June to 30th June. So it is 4,80,000. And then you also add goods in transit, because they are also my property as on 30th June 2020, which becomes 3,20,000. Okay, next. Sales were 27 lakh 20,000, which includes goods worth 6 lakh 40,000 sent on approval. So sales we will minus less cost of sales from 14th June to 30th June. Okay, so cost of sales, now sales minus GP you should do. So sales is given as 27 lakhs 20,000, and which includes goods worth 6,40,000 sent on approval. Half of these goods were returned before 30th June, but no information is available in regarding to the remaining. Now, the half which is there, so first we will minus that half which is returned. So that is 3,20,000. So then my sales become 24 lakhs, and the half which was returned, so that will add to my stock. Cost of goods sent on approval. Now, 3,20,000 is the selling price. Then you should adjust the GP as and when you, so you will minus the GP as and when we find it. Okay. Next one, goods are sold at cost plus 25%. So the profit is 25% on cost, that is 1/4 on cost. Therefore, 1/5 on sales. 1/5 on sales is 20%. So you minus 20%, and here you also have to less the gross profit. Okay. However, goods costing 4,80,000 have been sold for 24 lakhs. So, sorry, 2,40,000. Sorry. Yeah. So, there will be a little calculation for gross profit. So, we'll write working note number 1. Calculation. Now, First, can I say there are goods value 4,80,000 which you have sold for 2,40,000, means you have made some abnormal sales also. So, my actual sales is 27,20,000 less, can I say, abnormal sale has happened of 4,80,000. Sorry, costing 4,20,000, sold for 4,80,000. Costing 4,80,000 has been sold for 2,40,000. So this is the selling price which I will minus, and some goods are returned on approval basis. So that also is the sale that is on which there will not be any gross profit. So can I say my sales will be 27 minus 24, 25, 32. So it will be 21,60,000. Okay. Now my GP on 21,60,000 at 20% will be 4,32,000. Then I made a loss of on abnormal sale 4,80,000 minus 2,40,000. So that is also 2,40,000 only. So this is the loss that I have made. Therefore, my gross profit is only 1,92,000. So that 1,92,000, sorry, so 24 lakhs minus 1,92,000. So I think you get about 22 lakh 8,000, which you will minus. So you should be arriving at goods in transit 3,20,000. This if you minus 6 and 2,56,000, 3,20,000, 480. Okay, so and this is 96 lakhs. So you get about 89 lakhs 28,000. Clear till here? Okay. Chalo. Next, let's go to question number 2B. Now, on 31st March, the bank account of Chandan, the bank, according to the bank column of cash book, was overdrawn to the extent of 4062. So there is OD. On the same day, the bank statement showed a debit balance of 20795 in the favor of Chandan. An examination of cash book and the bank statement reveals the following. So you have certain transactions. You are required to show appropriate rectification required in the cash book of Chandan to arrive at correct balance on 31st March and to prepare a BRS as on the same date. Okay, so they want us to prepare adjustment in cash book, only the bank column, and then they want us to prepare the bank reconciliation statement. Okay. Now let's start. So first, OD as per cash book is given. So you write on 31st March 20 by balance brought down. It will be 4062. Okay. Check for 13,14,000 deposited on 29th March was credited only on 4th April. So this is check deposited but not yet cleared. So can I say this is an item of BRS? So in BRS you will have balance as per cash book, which will arrive from cash. Then now you are having checks deposited but not credited or collected. So you will add check deposited not cleared on 31st March 20. So you will add 13 lakh 14,000. Okay. Next. Then the next one, a payment of check of rupees 16,000 has been entered twice in cash book. Now can I say payment will come on the credit side? So two times you have written on the credit side. So once you write on the debit side. So on 31st March you're passing the rectification to party account 16,000. Okay. Then on 29th March, the bank credited an amount of 1,17,400 received from a customer of Chandan, but the advisor not received by Chandan until 1st April. So bank has given us money, so our account will increase, hence debit. So you write to customer, that is 1,17,400. Okay, next. Bank charges 580 not entered in cash book, so it is an expense. So by bank charges, bank account will decrease 580. On 6th March, bank credited 20,000 to Chandan in error. So now this is error in passbook. So we cannot do anything about it. Therefore, it will still be a part of BRS. So you will less credit by bank 20,000. Okay. Next one. A bill of exchange for 1,40,000 was discounted by Chandan with his bank. This bill was dishonored, but no entry has been made in the books of Chandan. Once you discount a bill with the bank and the bill gets dishonored, so the bank will not ask money from that person, they will directly take the money from your account. So your account will decrease. So it will be 1,40,000 by customer account. Okay, next one. Check issued up to 31st March, not yet presented for payment. So less check issued, not presented for payment. So that is 13,26,000. Okay, that's it. So with this, we are done with this sum. So here, what the balance carried down is 11,242. Right to balance carried down. Therefore, this is overdraft 11,242, and then you arrive at 20758, which is again OD as per passbook. Nothing but your credit balance as per bank statement. Okay, chalo. Let's go to the next question. Question number 3A. Now, question number 3A is consignment. Very good question. Again, we've discussed this kind of question in the classroom. Gagandeep of Delhi consigned to Mandeep of Ludhiana goods to be sold at invoice price, which represents 125% of the cost. Mandeep is entitled to a commission of 10% on sales at invoice price and 25% of any excess realized over invoice price. So one, here goods are sold at invoice price or above. Second, you're getting commission, and the commission is 10% on sales and 25% is overriding. The expense on freight and insurance incurred by Gagandeep were 15,000. Account sales received by Gagandeep shows Mandeep has effected sales of rupees 1,50,000. So this is the sales made by the consignee in respect of 75% of the consignment. His selling expenses to be reimbursed were 12,000. Expenses of consignee. 10% of the consignment goods of the value 10% of the consignment goods of the value 18,750 were destroyed in fire at Ludhiana go down. Okay, so there is a abnormal loss in the consignee's premises. Consignor's premises. So you will add direct expenses of only consignor. Mandeep remitted the balance in the favor of Gagandeep. You are required to prepare consignment account in the books of Gagandeep along with necessary calculations. So they have asked us to make in the books of Gagandeep consignment to Mandeep Ludhiana. Okay, so we'll be making a consignment account. Again, as I'm telling, I will give you a format how exactly to write an exam. This is just discussion. Okay, now first, so can you see that they have now, okay, we'll read the question again, and as and when we get information, the same things we will start putting. Okay, Gagandeep of Delhi consigned to their sold at 125%. Okay, so there will be stock reserve on opening and closing, so you have to remember to remove it. Commission is there, so we will write off commission. So first you will write off 2 goods sent on consignment, and there's to remove stock reserve, we'll write off by goods sent on consignment. Okay, then there will be commission, so you write 2 Mandeep in bracket commission. So we remember that we have to calculate it. Okay, the expenses of freight and insurance Magagandi. So here write 2 cash and bank or cash, 15,000 he has spent, consignor's expense. Okay, account sales shows that he has sales of 1,50,000. So by Mandeep, so this is sales 1,50,000. 71. His selling expenses are 12,000. So to Mandeep again, expenses 12,000. 10% of the consignment goods of the value 18,750 were destroyed by fire in Ludhiana Godown. So by abnormal loss, okay, so we have abnormal loss which we will calculate now. Okay, next. Okay, now this abnormal loss is also at invoice price, so we will do the according calculation. Remittance, the balance in favor. Okay, fine. Now first, you need to calculate goods sent on consignment. So they have told 10% of the abnormal loss of the invoice price 18,750 is loss. So therefore 100% will be 1,87,500. So this is your 1,87,500. Now this is at 125%. Therefore 25% of this will be, now 25%, where is the load? 25% is on cost, therefore it will be 187,500 into 25 divided by 125. Okay ma'am, in why divided by 125? It's because that it is 25% on cost, so therefore 20% on invoice price. So you can do 20% or 25 divided by 125, it will be the same. So you get about 37,500. So that will be your load. Any doubt till here? Okay. Next can I say the next thing that we have to calculate is the abnormal loss. Okay, the next thing that we have to calculate is the abnormal loss. Okay, now, so abnormal loss, they have told now, so abnormal loss is 10%. So abnormal loss at invoice price is given as 18750. Therefore, abnormal loss at cost price will be 18750 into 100 divided by 125. So I get my abnormal loss as thing. So therefore 15,000 is my abnormal loss. Then can I say I should add proportionate expenses of consignor. So 15,000, no sorry, here's the 15,000, yeah, 15,000 into 10%, so it will be 1,500. So total it is 16,500. So your abnormal loss is 16,500. Okay, then now the next thing is commission. So they have told, I'll just write here commission. So they have told that commission is 10% up to invoice price and any other above is 25%. So 187,500 is the goods sold. Of that 75% he is sold, which is 1,40,625. But can I say this sales is made for 1,50,000? So the excess 9375 is the excess. So commission ordinary will be 140,625 into 10%, and overriding will be 9375 into 25%. So my total commission becomes 16,406. So here 16,406. And the last thing we have to calculate now is the closing stock. Now, goods sent were 100%, sold 75%, left 25%, minus 10% abnormal loss. So left will be 15%. Okay. So closing stock is 15%. This is sales. This is abnormal loss. Now, so invoice price of the goods sent is 187,500 plus consigners expense, which are direct, 15,000. So my total cost is 2,02,500. Of this only 15% is left, so that becomes 30,375. So therefore now my load will become 30,375. Okay, first we'll write this by closing inventory 30,375. Therefore, next we have to write to stock reserve. So that will be 37,500 into 15%. Okay, so that will be how much? I think 5625. Okay, ma'am, how 37,000? 37,500, that will be 37,500 is nothing but your cost price of the goods sent plus the load, sorry, plus the consignor's direct expense. So we have finished goods sent on that load, consignor's direct expense, consignee's direct expense, commission, sales abnormal loss. Then we have also finished stock reserve. Therefore we have to do by general P&L account, and you do the balancing figure here. So that comes up to 2156. Okay. So let's go to question number 3B. Question number 3B. On 1st January 2020, Ankur account in Varun ledger showed a debit balance of 2,500. The following transaction took place between Varun and Ankur during the quarter ended 31st March. So these are the transactions. Accounts were settled on 31st March by the means of check. Prepare an account current to be submitted by Varun to Ankur as on 31st March, taking interest into account at 10% per annum. Calculate interest to the nearest rupee. Okay, so we have to prepare account current. For account current, I will have to draw the format, otherwise it becomes a little difficult to solve. So we write, oh shit. Okay, in the books of, now who has to give to whom? Can I say Varun has to give? So in the books of Varun, okay, Ankur in Current visit Varun. Next one. Yes, to 31st March 2020. So we'll do product method, date, particulars, then amount, date, product. Same columns on the other side. Okay, now let's start. First, I have a balance of 2500. So this is all 2020. So we write the year so that we don't have to write the year again and again. Okay. Okay. So first Jan. So what do you have? 2020. So to balance got down. So amount is 2500. Now this has to be now this has to be 31st March. So 1st Jan to 31st March. So can I say it is 90 days? So your product becomes okay. Next, on 11th Jan, you're making sales. So sales account will be credited and this account will be debited to sales. So the amount is 3000. So 11th Jan to, so it becomes 79 days. Then next, 1st Feb, Ankur is selling goods to us. So for us, no, sorry, 24 Jan, Varun received a promissory note from Ankur due after 3 months. So can I say, for you, a promissory note is coming in. So it will be 24th Jan by promissory note. So due date is after 3 months. So 21st Jan means plus 3 months. So 21st Jan, 21st Feb, 21st March, 21st April plus 3 days. So can I say the amount is 2500. So can I say 24 plus 3, 27. So can I say you are negative 27 days? So we will calculate. Yeah, you can do that also. You can do opposite also. The effect remains the same. First Feb, Ankur sold goods to Varun 5000. So for us purchases, so first Feb by purchases. So purchase of 5000. First Feb to 31st March, 58 days. Okay, next. Then you have 4th Feb, Varun sold goods to Ankur. So again, you have sales, 4th Feb. So sales about 4100. 4th Feb, so it becomes 55 days. Okay, next you have 7th Feb, Ankur returned goods to Varun. So Ankur is returning, so therefore it is sales return. So what date? 7th Feb. So sales return is 500. 7th Feb, so 52 days. Okay, then next you have 1st March. Ankur sold goods to Varun. So Ankur is selling. So for us it is purchases. So you made a purchase of 2,800. So 30 days. Then you have Varun sold goods to Ankur 4,600. So as it is sales on 18th March. So it is 13 days for amount of 4,000. And lastly, Ankur sold goods to Varun on 23rd March. So again, it is purchases for about 2,000. That will be 8 days. Okay, that's it. Then now next on 31st March, we'll do by balance of product. Okay. So you get 398. Then you will account for interest on 31st March. So interest will be calculated as 3,98,800 into 10 percentage into 1 divided by 365. So that will be how much? 110. Okay. So then he's clearing the due on 31st March. So by bank. Okay. So 1510 is what you will pay. And that will be your final answer. Okay, let's go to the next question then. Question number 4A. From the following information of Messrs. Rose Club related for the year in the 31st March, you have stock of sports material, amount due, subscription, subscription receipt, subscription payment. You're required to ascertain the amount of subscription and sports material that will appear in income and expenditure account. Super easy. So we have to open one subscription account. And we have to open one sports material account. You can't go wrong here. Now, this is the income account and this is the asset account. Okay. Now, so stock of sports material. So you write to opening stock, asset, 225,000, and you write by closing stock, 337,500. Then amount due. So by opening outstanding, 202,500 and to closing outstanding. 292 500. Okay, subscription due. So subscription due means for you receivable. So to opening outstanding by closing outstanding. Opening outstanding is 33,750 and 49,500. Subscription received in advance. So by opening pre-received 27,000 and to closing pre-received 15,750. Okay. Then name. Subscription received during the year. So receipts and payments you have received 11,000, 11,25,000 and payments for sports material during the year. So if you pay, receipts and payments will be credited. Therefore, you debit here 675. Therefore, by income and expenditure account, you get 6,52,500 and to income and expenditure account, the balancing figure. What happened? Ready? Just 1 second. Okay. Okay. So for some reason the screen just went, but yeah. Okay. So here you get a balancing figure of 11,52,000. Okay. So sports material we have already done, and then you will write the subscription. Sure. Let's go to the next question. Question 4b. P and Q are partners in a firm sharing profit and loss in the ratio of 3:2. The balance sheet of P and Q is given as follows. You have creditors, bills payable, bank overdraft, capital account, building furniture, stock and trade, debtors, PDD, investment, and cash. R was admitted to the firm on the above date on the following terms. He was admitted for 1/6 share in the future profit and to introduce a capital of 50,000. Okay. New profit sharing ratio is given 3:2:1. R is unable to bring in cash for his share of goodwill. Partners therefore decide to raise goodwill account in the books of the firm. They further decide to calculate goodwill on the basis of R's share in the profits and the capital contributed by him to the firm. Furniture is to be written down, stock is depreciated, provision is required on debtors. Provision would also be made for outstanding wages, building have appreciated, and the value of investment is to be increased. It was found that creditors included a sum of 2,800 which is not to be paid off. Prepare revaluation account, partners capital account and balance sheet of the new firm. Now, first you will do profit sharing ratio. So OPSR is given as 3:2. NPSR is given as 3:2:1. Therefore, sacrifice ratio will be 3:2 itself. Then second, goodwill. So they have told goodwill is based on his share. So for 1/6 share, he is bringing in 50,000. So for full 1 share, how much is the goodwill? How much should be the capital of the firm? So can I say it should be 3 lakhs? PQ and RR, the capital is 88,000, 72,000 and 50,000. Therefore, the capital becomes 2,10,000. So therefore, the goodwill becomes 90,000 of the firm. This is called as hidden goodwill. Okay. Next, we will prepare revaluation account. So in revaluation account, increase in asset comes here, decrease in liability, decrease in asset, increase in liability. Okay. Now, first one, they are telling Furniture is to be written down. So you write to furniture by 1740. Then stock is to be depreciated by 5% to stock. So stock value into 5% will give you 2140. Then provision is required for debtors. So to PDD. Now 5% of debtors equals 3500 minus opening is already given at 400. Therefore further you will make only 3100. Okay. Then provision also for outstanding wages. So to outstanding wages equals 3120. So by building is appreciation 558 400. So 52. So it will be 6400. Value of investment to be increased by 900. So by investment 900. And lastly, creditors not to be paid. So by creditors decrease in liability 2800. So if you check, your revaluation account will tally at 10,100. Okay, so there is no revaluation profit or loss. Then you will do partners capital account. Okay, so in partners capital account you have P, Q, R, P, Q and R. So first you will do by balance brought down. So 88,000 and 72,000. Then he will bring in cash by cash 50,000. Then you will raise the goodwill. Now goodwill will only belong to old partners in sacrificing ratio. So 90,000 to be distributed in the ratio 3:2. 54,000 and 36,000. Okay, that's it. So no further adjustment, no revaluation, no reserves, anything, nothing at all. So we'll do to balance, carry it down. Here you should get 1,42,000. Here you should get 1,08,000. And here the total will be 50,000. Okay. Now the next thing they have told us to lastly prepare balance sheet. So lastly we will prepare balance sheet of new firm, that is after our admission as on 31st March 2020. Okay. Ready? So we'll prepare balance sheet. Okay. चलो तो balance sheet बनाएंगे. Now first we'll start with liability side. So capital accounts. So P, Q and R 142, 108 and 50,000. So you get 3 lakhs. Then you have creditors. So after adjusting, you should get about 18,000. Sorry, 23,000. 25 minus 23,000. Then you have bills payable. 8,200. Then you have bank overdraft, 18,000, and new one, outstanding wages, 3,120. Okay, on the liability side, you have building, 58,400. You have goodwill, 90,000. You have furniture, 9,860. You have stock, 40,660. You have debtors, 70,000 minus PDD, 3,500, 66,500. You have investments, 5,900, and lastly cash, 31 plus 50 becomes 81,000. So therefore your balance sheet tallies at 350 to 320. Okay, sure. Okay, ठीक है, चलो let's go to the next question. Question number 5A. Mrs. Surya Transport purchased 10 Innova cars at rupees 4,50,000 each on 1st April. On October 1st, 2019. So you have to understand there's a difference of so many years, 17 and 19. One of the Innova car is involved in an accident and is completely destroyed, and 2,70,000 is received from the insurance company in full settlement. On the same date, another car is purchased by the company for a sum of rupees 5 lakh. The company writes depreciation at 20% on original cost per annum. Company observes calendar year as its financial year. So calendar year is your financial year. You are required to prepare Innova Cars account for the year ended 31st December 19 and 31st December 20. So you write Innova Car account. Okay, now 1st Jan 2019, you will have to balance fall down. Now basically, can I say you had 4,50,000 one car, okay, and you depreciated it for 2017 9 months, 2018 full year, then you would have got the value. This value multiplied with 10 will be your balance brought down. Okay, now depreciation is 20%. Yeah, 20%, correct? So for each car, can I say the depreciation here will be 67,500, and here it will be, can I say 90,000? So you get 292,500 into 10. Okay. So your balance bought 2 lakh, 29 lakh, 25,000 will be your balance brought down. Now on 1st October, one of the car is involved. So 1/10/19, whenever there is an accident or sale or anything, you have to account for 3 things: by bank, money received in bank; by P&L, profit or loss on sale, sorry, first depreciation up to the date of sale; and by profit or loss. If it is profit, we write the other side. So the insurance company paid 2,70,000 in full settlement. Now, on this amount, again, you would have done 20% for 9 months. So you will get a depreciation of 67,500 again. So it will be 67,500. Original cost, sorry, 292,500 minus 67,500. So you get something about, can I say, 225 minus sale price is 270. So can I say there is a 45,000. So your cost is 225. Your selling price is 270. So can I say you made a profit? So since you made a profit, we will write on the other side to P&L. It will be 45,000. Okay. So whenever there is a sale, you need to account for three things. Now can I say for the balance on 31st March, 31st December, you have to provide for the depreciation. So for the 9 cars into full year depreciation is 90,000. So 9 9 the 81. Okay. 9 9 the 81. Now, plus they have also told on the same date, that is 110, you purchased a new car for rupees 5 lakhs. So for 9 cars, 90, and for 1 car, 5 lakhs for 3 months. So your depreciation comes about 8,35,000. Then you have by balance carried down. So we are balancing figure 2,27,500. Okay, so we have to provide for one more year. So on 1st Jan 20, to balance brought down 22,97,500. On 31st December, we will provide for depreciation. So for 9 cars, we will provide at 90,000, and for 1 car, it will be 50,000. 5 lakh into 10%. Okay, so 8 lakh. So it will be 9,10,000. Any doubt till here? No. Okay, then we have to do by balance carried down. So you will get 13,87,500. So let's go to the next question. Question number 5B. Okay. Now 5B question number. The following is the balances on 31st March extracted from the books of Mr. Sanjeev. So you have balances, additional information. Then we require trading profit and loss account for the year ended 31st March and balance sheet as on that date. Chalo, let's do this. So you prepare. Now, format again, I am repeating. I will give you how to do. I'm just discussing here. So you have trading account. Then you have profit and loss account. And then you will prepare your balance sheet. Okay, so let's start now. First, plant and machinery. So it will appear on balance sheet. Okay, the first thing is plant and machinery. So 39,100 in the inner column. Then you have furniture and fittings. Again 20,500. Then you have bank overdraft. 1,60,000. Then capital. So this will be opening. 1,30,000. Then drawings. 16,000. Then you have purchases. Go to trading account. To purchases. In our column, 3,20,000. Okay, then you have opening stock 64,500. Then you have wages 24 in our column 24,330. Then you have PDD. So come to P&L, you write provision for doubtful debt opening, so 6,400, and provision for discount on debtors opening 2,750. Then you have sundry debtors, so debtors inner column 2,40,000. Then creditors 95,000. Then you have bad debts. So bad debts will go in P&L of about 2,200. Bad debts appearing in our trading account means entry is done. Bad debt recovery will come here. So first you write by GP, by bad debt recovery 900. Salaries, so 2 salaries 45,100. Salaries payable, so outstanding 4,900. Then prepaid rent, anything paid in advance is a asset. Prepaid rent 600. Then rent expenses to rent 8,600. And carriage inwards will come in trading. So to carriage inwards 2250. Then carriage outward will come here. To carriage outward 2,700. Then you have sales. So read by sales in a column 430 600. To advertisements to advertisement 6,700. Okay, then you have printing and stationery to printing and stationery 2,500. Then you have cash in bank and cash at hand. Cash in bank 6,250. Cash at bank, cash in hand. $2,900. Okay, office expenses to office expenses 20,320, and interest paid on loan 6,000. So to interest paid on loan 6,000. Okay, purchases include sales returns and sales includes purchase return. So come back. Purchases include sales return. So less. Okay, first and sales include purchase. So less purchase returns 3,450 and less sales return 5,150. So you get, okay. So they include that, so we need to minus. So now purchases include sales return. So now what we will do, we will also minus sales return 5150, and we will also minus purchase return 3450. Purchases include sales return, so sales return includes purchase return, so we minus from them respectively, and then we will also minus the respective purchase returns and sales return. So you get 4,22,000 and 3,02,750. Okay, then goods withdrawn by Mr. Sanjeev for own consumption 7,000 included in purchases. So can I say this Mr. Sanjeev has withdrawn by Sanjeev for own consumption for rupees 7,000 included in purchases. Means that goods have been included in purchases for the drawings of Mr. Sanjeev. So what do we need to do? From here, we need to minus the drawings of 7,000. How much is this? 24,330. And in drawings in the balance sheet, we need to add it. So further drawings of 7,000. Okay. Then create a provision of 5% on doubtful debts and 2.5% on PDD. Discount also. So now PDD will be created on the debtors balance. The debtors balance here is given 2,40,000. So 5% of 2,40,000 will be how much? 12,000. So outer column will be 5600 and 2.5%. So 2.5% after minusing the 12,000. So it will be 2,28,000. So it will be 5,700. So outer column we get 2,950. So when you go to balance sheet, in debtors you minus PDD. So that is 12,000. So you get 2,28,000. Then you minus provision for discount, which you just calculated to be 5,700. And then you put the amount in out column. Okay. So that will be about 2,22,300. Check. 3 samples distributed 1,650. So minus advertisement 1,650. So advertisement and 3 samples. So that will be 1 second. So 3 sample 1,650. So 8,350. Okay. Wages paid up for the month of April for installation of plant and machinery 900 included in wages. So come to wages. 24,330 minus plant 900. So 23,430. And go to plant and machinery. So you will add wages 900 will become 40,000. Okay. Bank overdraft is secured against hypothecation of stock. Bank overdraft outstanding as on 31st March has been considered 80% of the real value of stock, deducting 20% margin. And after adjusting the margin value of 80% of the same has been allowed as a overdraft. So this they have given for your closing stock. So closing stock. Now, whatever is the stock, they will deduct 20% margin. You get 80%. And again, for that, they did after adjusting the margin value of 80%. Means again they will deduct 20%. So that is 64. This is the amount of your OD. So therefore, how much will be the closing stock? If you do cross multiplication, you will get 2,50,000. So this is the value of the closing stock they have given. $2,50,000, and closing stock will also come in trading account. $2,50,000. Depreciation 15% on plant and 10% on furniture. Okay. So depreciation minus depreciation. So you get at 15%. So you should get 6,000. So that will be 34,000 and minus depreciation. So at 10%. So that will be 20. So that will be around 18,450. Okay, so with this we are done with the sum. Let's start calculating. So you finished opening stock. So purchases will be 3,02,750. You have closing stock, you have wages. So arrive at GP of 279,070. So we write here 279,070. So then you write to net profit. You find the balancing figure 1,67,600. Before this thing, we need to write the depreciation. Plant and machinery, we calculated 6,000. Furniture and fittings, we calculated 2,050. So then you can arrive at net profit 167,500. That should be added to capital in the balance sheet. So add net profit 167,500. So then we will next tally your balance sheet. 2,74,000 with this. So then bank overdraft creditors and salaries payable. So thereafter, if you tally on both the sides, you get 5,34,500. You get 5,34,500 and your balance sheet tallies. So let's go to the last question, question 6A first. Now, Alpha Limited registered with an authorized share capital of 4 lakh divided into 2,000 shares of rupees 100 each, issued for subscription 1,000 shares. So we are here only talking about 1,000 shares. Payable 25 on application, 30 on allotment, 20 on first call, and the balance as and when required. Application money on 1,000 shares were duly received and the allotment was made. The allotment amount was received in full, but then the first call was made. Two shareholders failed to pay the amount on 100 shares each held by them, and another shareholders with 100 shares paid the entire amount on his share. So two calls in arrears and one calls in advance. The company did not make any other call. Give journal entries in the books of the company to record the following. So first we will talk about, now first application money is coming in. The journal entry will be bank account debit to share application. So that will be 1000 shares into 25. So 25,000. Then you will transfer share application amount to equity share capital. Okay. Next, what you will do, you will call for allotment. So share allotment, there is no premium. Debit to equity share capital. How much for allotment? 30 rupees. So it will be 1000 into 30. So it will be 30,000. So allotment was received in full. Okay. So next you will receive allotment money. So bank account debit to share allotment account 30,000. Okay. Now next main entry. Next. So you will first call for final call. First call. Share first call account debit to equity share capital. So how much is this? 20 on first call. So 1000 into 20. So 20,000. Now 100 shareholders, 200 shares. So 2 into 100, 200, 200 into 20. So can I say 4,000 rupees is calls in arrears and one shareholder paid next also in advance. Okay. So see first. So bankally you have to receive money debited. Then you have calls in arrears, receivables, so asset. To share first call. To share, so no, to look for calls in advance. Calls in advance. Now, first of all, two shareholders of rupees of 100 shares did not pay 20 rupees. So this becomes 44,000. Correct? Yeah. Then, what did they say? Another shareholder with 100 shares paid the entire amount on his share. So along with paying towards the call in arrears for 100 shares, he paid. Now see, out of 100 rupees, can I say 25 plus 30, 55, 65, 75. 75 is what he had to pay, but can I say he's paid that extra 25 also? So can I say this 2,500? Okay, any doubt till here? So, and first share first call will go 20,000. So the balance will be 18,500, which will come in bank. Any ticket? So with this we finish that. So let's go to question 6b. Aditya Limited issued 20,000 9% debentures of the nominal value 1 crore as follows. To Sundari person for cash 90% nominal value 50 lakhs. vendors for purchase of fixed asset, and bankers as collateral security. So required to pass necessary journal entries. Now see, when he gives to people for cash, now he is giving it 90%. So can I say it is issue of debentures and discount? So your journal entry will be bank account debit. So you are receiving 90%, so that is 45 lakhs, to debenture application. Then you will do debenture application to, sorry, discount on the issue of debenture, to which, for how much percent debenture? 9% debenture account. Okay, so here will be 45 lakhs, here will be 5 lakhs, and here will be 50 lakhs. Okay, so next one. Vendor for purchase of fixed assets worth 20,000. So you purchase a fixed asset. So fixed asset is an asset, asset increase debit, fixed asset account debit, 20 lakhs, to vendor, 20 lakhs. Then you are issuing debenture to him. So vendor account debit to discount on issue of debenture account debit to 9% debenture account. So debentures are going out worth 25,000. Vendor had to be paid only 20 lakhs. So the balance is discount. And lastly, bank to a banker as a collateral security of the loan of 20 lakhs, 25,000 of the nominal value. So for this, journal entry will pass bank account debit to bank loan, 20 lakhs. Because loan is coming in only for 20 lakhs. Debentures with 25 lakhs are going out, that will be disclosed as a note. Am I clear? So that will be disclosed as a note where we will say that debentures worth so much is issued as collateral security. When you write this loan in the balance sheet, right? When you write this loan in the balance sheet, that time you will write against the hypothecation of loan. And last one, question C, difference between money measurement concept and matching concept. Now, what is a money measurement concept? Money measurement concept says that all transactions which can be measured in the terms of money should be recorded. Non-monetary items should not be recorded. So this is what is money measurement concept. And what is matching concept? Matching concept is for all incomes that you have earned during the year, whatever expenses is incurred, that should be recorded in the P&L. Okay, so for the revenue earned, corresponding expenses should also be recorded. That is matching concept. So for this, you should just write the definitions of money measurement and matching concept. That should be more than enough. Okay, so with this, we have finished discussing mock paper 1. Okay, I wish you all the very best. Please study well. Your accounts notes, what we have discussed during the class, is more than enough. Study that much and more. You will be good for the exam. Okay, please study well, present well in the exam. Thank you, everybody. Bye, everybody.